Now this will bring me to a point, and this is what led me to do what, to investigate this. Notice that this low here, right? Why, when we get stopped out in a trade, this is what led me to investigate. When we get stopped out in a trade, usually, okay, is something like this. And when these lows and these highs, when they get taken out, they will trigger a move in the market. All right, when these highs and these lows get taken out, they will trigger a move in the market. What kind of move? They're going to trigger big moves in the market. Hence, anytime we get stopped out, big moves happen. All right, anytime we get stopped out, that's when big moves is happening in the market. So how does it look like? Well, the first thing to do is identify if this low is this kind of, if the order block that you're buying or selling, if it's this kind of order block where it took out a stop and then price went up. Basically, what I'm saying is, did we buy this way? Did we buy this way? Because if we did, if this gets stops, if this one stops out, okay, because of the fact that price took out stops here and is coming back down, usually this is going to trigger big move, because liquidity is going to build below this low. So here, if price was to ever come back down here and attack this low, it will trigger a big change back up again. And simply with the fact that we have we call it strong low, right? The fact that price took out this low and then went up, is going to come back and attack this low. I'm not saying it's going to come to and attack it, but if it goes down there, that is going to trigger a big push to the upside. All right, so if you look at the inducements that I'm showing you, they all have this kind of phenomenon. Okay, they have price taking out a previous low and creating that order block there, and the order block that forms near them is what is the engineered order block, because in the lower time frame, when you drop down to the lower time frame like I did here, and you start doing, this is my strong low, that's my strong high up there, everything else in is what? Liquidity. So if you identify the lows, for example this one here and this one there, and then you drop back up to the higher time frame, what do you see? There's another block here, right? This is just a low sitting below that, price drops below that and then reject. Okay, let's look for I think this one. Yesterday I talked about this particular one, this one here, this one. Notice that we have the rate and then price drop down all the way down here. So this is a true high that is not supposed to be breached. Okay, so if you are not supposed to breach this high, then this becomes a strong high, or it becomes a kind of resistance. So if we have an order block and we have a short-term order block there, this inside that is liquidity, this is liquidity, that Yeah, that's it. This one and this one is basically liquidity, and then price will attack these levels. Now on the downside, what do we have? We have this low going for that low, and then we broke up. So this becomes the true low. This becomes liquidity. Okay, that becomes liquidity. If price is ever to come and attack this low, all you have to do is just go onto the high time frame. Do we have another block? Do we have another block there? This one, yeah. Have we tapped everything? If we have, then price is going to do what? It's going to go through. If we haven't, then when price came down, this would have been the level. Let's say this low was just a little bit up. I would have looked at this level as where price is going to come to, and then reject and go up again.